What if you could invest in a company that's a leader in its field, and it's tackling one of India's most urgent health challenges? Well, today, we're diving into Healthcare Global Enterprises, or HCG. We're going to break down its market, its unique strategy, and its pretty ambitious plans for the future.
You know, to really get why HCG is such a compelling story, you first have to understand the sheer scale of the problem they're built to solve. Their whole business is based on a massive and unfortunately growing health crisis in India.
And let's put a number on that crisis: 2 million. By 2040, India is expected to see 2 million new cancer cases every single year. That is nearly double what it was back in 2018. Now, from an investor's perspective, that staggering figure screams one thing: a huge, undeniable demand for specialized care.
And this quote from the Mongol Keshav report really nails it. Right now, most of the top-tier cancer care is clustered in the big metro cities, right? That leaves huge parts of the country completely underserved. And that's not just a gap in healthcare. That's a massive market opportunity just waiting for a company with the right plan. So the big question is, how exactly is Healthcare Global Enterprises set up to capture this surging demand? Let's take a look at who they are and what makes them tick.
To put it simply, HCG is India's largest private provider of cancer care. Full stop. They have built their entire business around being the #1 player in this one absolutely crucial area of medicine.
And their scale is just impressive. We're talking about a network of 25 centers, more than 2,500 beds, and over 400 specialist oncologists. And think about this: treating close to 1 million patients in just 5 years. That doesn't just show you their market share, it shows a level of experience that is really hard for anyone else to replicate. So here's their secret sauce, what they call the focused factory model. While a general hospital is juggling a bit of everything, HCG pours every single resource, every doctor, every piece of equipment, every rupee, into just one thing: cancer care. That extreme focus creates efficiency and a level of expertise that those multi-specialty hospitals just can't compete with. That's their competitive advantage.
Okay, a great strategy is one thing, but does it actually make money? Let's get into the numbers, because honestly, this is where the story gets really interesting, especially for investors. Let's start with revenue. What investors love to see is predictability, right? And HCG delivers. They've been consistently growing at about 16% a year, and management says they expect more of the same. This isn't some wild, volatile growth story. It's steady, reliable expansion.
But hang on, this is the real story right here. Look at the profitability. Yeah, sales grew a solid 13%, but operating profit shot up by 24%. You know what that is? It's called operating leverage. It means that as HCG gets bigger, it gets way more profitable. For an investor, seeing that margin get wider and wider is a massive green flag.
So where's that revenue coming from? Well, the mix is pretty healthy. The majority, 55%, is coming directly from patients, either with cash or private insurance. And that's typically a higher margin business, which really helps support their strong financial position. So, the foundation is clearly solid, but where's the future growth going to come from? Let's take a look at their blueprint for expansion, because this is what investors are really betting on.
And here's the catalyst that could really light a fire under that growth: KKR. When a global private equity giant like KKR comes in and takes a majority stake, it's not just about the money. It's a huge vote of confidence. It's like putting rocket fuel into the engine to supercharge their expansion plans.
And their growth strategy is really smart because it's so diversified. They're not putting all their eggs in one basket. They're planning to add over 900 new beds by building brand new hospitals, expanding their existing successful centers, and strategically acquiring facilities in new cities.
And this isn't just talk, you know? This timeline shows a concrete, aggressive schedule. New capacity is coming online very soon, which gives investors a clear, visible pipeline for where future revenue growth is going to come from.
So after looking at the market, the strategy, the financials, and the future plans, what's the key takeaway here? What does this all mean if you're actually thinking about HGC as a potential investment? All right, let's weigh the pros and cons. The bull case is crystal clear. You've got fantastic profit growth, almost 20% a year, and a dominant position in a sector that's only getting bigger. The bear case? Well, the stock isn't exactly cheap, doesn't pay a dividend, and the promoters have been reducing their stake. It's that classic trade-off between growth and value.
Which brings us to this final critical question. HCG has proved its model is profitable and has a clear plan to expand and meet a desperate need. So the bet for an investor is this: Will this specialized, focused approach ultimately create more long-term value than the bigger, more diversified healthcare players?